Hey guys, what's up? Welcome to another episode with me, Shashank Udupa. And today on Popular Demand, I'm going to talk about some really good global stocks that you can start doing an SIP or start investing in them today itself. Why am I saying you can start looking at global stocks? Because we know for a fact there are a few things happening in the global market. Nasdaq and S&P 500 basically have corrected big time in the last few months, and it's not only them, it's even the Indian markets. But we've had a massive correction. Apart from the massive correction, we also see that the dollar averaging will do really well for us. Why? Because rupee is becoming weak and dollar has now hit 80 rupees almost, right? So it has become quite significant now that the dollar is rising up really fast, and we should obviously have some kind of portfolio allocation which is diversified in the other global ventures or global stocks, so that we can get some advantage from the dollar rising price as well. So today what we're going to do is we're going to see some stocks that have actually fallen from their grace, and now we can take some advantage of these stocks and start investing in them to go above. Right now, another very important announcement which I will do in the course of this video is that today I'm going to do a very nice sweet giveaway where you guys can get Apple shares worth 750 rupees for free. Right, I know you guys are slightly excited for Apple shares. You'll get it for free completely, but I'll tell you how to do it. There's some steps to do it as well, but while we go through the video, we'll talk about that. Okay, so today's video, this is what it's going to be. Let's begin. Now guys, first understand what is happening in the global economy right now. One is the Russia-Ukraine war is kicking in, and I've told this multiple times in other videos. The prices of oil are going up because supply is getting crunched. That's why we see Warren Buffett constantly investing in different companies which are petroleum companies, and there's an update on that as well. So we're going to look at all of these things. So ideally now you would be like, Shashank, what is the best time to buy or best time to time the market? There is no best time to time the market, right? Ideally in such a scenario which I call the golden investing period, in this scenario usually it's best to just start investing into an SIP format. Why? Because there are some benefits of SIP format where you can start investing at a low amount, as low as 500 rupees. You can start an SIP, and you can also start an SIP into global stocks. That is also an advantage that you have. And basically now you can take advantage of the rupee depreciation or the strengthening of the dollar as well. So before wasting any more time, let's go quickly into the first stock that we are looking at, and it's also the stock that I'm giving you guys as a giveaway today as well, and that is none other than Apple. Now let me quickly go through what we're doing with the Apple stock. Right now, if you look at Apple, I'm just going to click on this and we go inside Apple. Right, so Apple in the last 1 month or in the last 1 year, look at the fall from grace that has happened. This is because all the companies have taken a massive steep fall when the entire market corrected, and we have seen that it's just now breaking out from this region right now, and it's now going up and making a new rally, and the bottom is over unless and until a really bad news comes tomorrow, which I don't think might happen. Then we will go back down, or else I think this is going to go back up, and eventually it will break this $177 mark as well, and currently we're at 153. So another 10 to 15% returns looks very attractive here. And if you look at it from a zoomed out perspective, Apple is a stock that will always go up, and it will break this high and start making new highs as well. Right, so basically this is a very interesting stock that you can look at. Why? Because it has gone down, and the fundamentals of this stock, I don't need to tell you, is obviously quite significantly good. If you look at the income, if you look at the revenue, it's all upward journey. Why? Because now they're doing such smart things. Number of things that they're doing smart is now they don't give you a charger. You have to get your own charger. You have to pay extra for it. iPhone keeps coming out. It's a seasonal business. Every year they launch new iPhones. The sales figures come out. MacBook comes before that. So they've made a system that you can constantly start making money from this system, right? And recently there's a news article that has come out, which came out recently last month itself. Actually not even last month, yesterday it came out, where Apple basically said that they're going to slowly start freezing the hiring process. Now why during recession? Because they have a fear of recession. Now why is this good for us? Why do you think that this is good? You'll be like, Shashank, that's not good. See, because when companies or big companies are trying to do a hiring freeze, that means they're trying to cut costs, right? They're trying to not make new investments. They're trying to keep as much reserves as possible and try to grow that money as much as possible, and they're trying to cut cost ahead of recession. Now if they cut costs, what will happen to the margin, right? So ideally the margin should initially go up, but then when the recession kicks in and the revenues might be going down as well, that can also go down and contract equally. But looking at iPhone, because the brand value of this phone is high, whatever happens, whether it's a good or bad market, you will see it going up itself, right? So that is why Apple currently looks very good. Why? Because they're also freezing hiring, and from a fundamental perspective, annual, quarterly, whatever it is, it looks really good from a yearly angle, right? Their EPS per share is currently at 6. The dividend yield is 0.8%. Dividend per share also that they gave recently was 0.8%. So they're doing really well. If you look at all the other stuff that is there over here, good revenues. Obviously, the future estimate is also good for them. They're currently trading at a P ratio of 27.21, so that means it's not too overvalued, not too undervalued as well, and that enterprise value is $2.7 trillion. I mean, come on, it's like really good. But either way, coming to the main point, this is a very good stock that you can keep it in your SIP basket. Okay, so this is a stock that you should definitely keep as an SIP basket, and I'll tell you how to invest in SIP baskets as well. Okay, very quickly now. By the way, guys, you must be wondering how you can do an SIP into US stocks from India. Well, it's possible with INDmoney right now. So basically, INDmoney app helps you invest in US stocks from India without any commission, without any brokerage, or no opening fees as well, right? So you can basically get the best currency exchange rate on this platform, and you get very low withdrawal fees that is there, which is lowest in the industry right now. So it is a great app for young investors because it gives you the ability to do investing in US stocks via an SIP format. You can also do weekly SIPs as well, and this starts at 500 rupees. Now, coming to the beautiful element here, which is the giveaway, right? Now, if you do want these Apple stocks that I'm talking to you about, basically, I'm going to give you a link in the description. Listen very carefully. If you sign up on INDmoney using the link in the description, you will get free Apple shares worth 750 rupees when you deposit some funds into your US account. So please understand it very carefully. Once you deposit some funds in the US account, after clicking on that link below, you will get shares worth 750 rupees from Apple, from INDmoney, which is Apple shares. Okay, so I hope that's cool. Come on, let's now look at the second stock that we will put it in our SIP basket. Now, the second stock, obviously you guys know what is happening with this stock, which is basically called Berkshire Hathaway. Let me zoom in a little bit for you. Berkshire Hathaway is basically Warren Buffett's investing arena, and I'll tell you why this is very interesting right now, because looking at all the moves that he's making, again, it has fallen down quite significantly from 539k to 424k. So there is enough space for an upside momentum coming in here. Now, if you look at Warren Buffett, what is he doing, right? So Warren Buffett basically is now spending more and buying more of Occidental Petroleum or Occidental Petroleum, I don't know how they call it, but basically now his entire stake is almost up to 20%. And we know this company, we spoke about it, right? Occidental Petroleum. And if you look at this share, this is only going up, and it will continue to go up in the next few quarters until and unless, or as long as the returns will be good, as long as the oil crunch is going on due to Russia and Ukraine. So again, I would say if you have extra budget, anyway, this is fractional shares, so you don't need $62 to invest. Even if you have $100 or $150 or even $50, you can start investing in this. You can go as low as 500 rupees, right? But I would say start putting these things in the basket only from a long-term perspective. That is number one. If you're looking at mixing a little bit of dividend portfolios that Warren Buffett already has, you can look at stocks like this, right? So there's one called Store Capital, which is basically a REIT. So basically this gives you a good amount of dividend as well. Annual dividend is $1.54 a share. He has Verizon, which is $2.56 a share. If you look at Citigroup, again $2. So I'm going to share this link in the description below. Heinz gives 1.6 dividend also. So these are some 4 stocks that you can simply add, which gives you a little bit of beta in the portfolio, so that you don't, like, it's not too volatile and you have good heavy grown companies into this as well, right? So that is basically stock number 2 that you can see right now. Now, the third stock, and this is very interesting or very, very nice to look at. The third stock is basically Amd Industries, and I can't stress enough on how this company will do really well going forward. Now, the third stock that I can't stress enough for to you guys, which is investing in this company, which is AMD. Now, a lot of things are happening in US. I don't know how many of you are keeping track of what's happening in US, but AMD definitely is poised to win against Nvidia and Intel. But now, recently, there's something that's come up recently, which basically it's called a chip manufacturing bill. So there's a new US bill that is coming for chip manufacturers, but now the bill is structured in such a way where it will actually benefit companies like Intel, okay, and will not benefit companies like AMD, Nvidia and Qualcomm, right? Why? Because the way it is structured, it is a disproportionate support to manufacturers like Intel while doing little for these guys. Now, Intel along with Texas Instruments and Micron Technology will do really well, which is a $52 billion chip act subsidies, right? Now, again, this is something that might create a problem for AMD, but looking at the tech advancements that they have, they are doing really well. But if you want to be safe, what I would suggest is you also invest in Intel Corp along with this, because it is again gone down quite significantly in the last 1 year. It's only correcting. Why? Because AMD was beating it, right? So I think you can put a little bit of both. If you're doing an SIP basket, these 2 stocks are really well. We got few stocks from Warren Buffett's investments as well, which is Occidental Petroleum, looks really good. Apple and Berkshire Hathaway is something. Berkshire Hathaway, you should definitely keep it. If you look at AMD right now, coming back here, if you look at AMD, as I said, they are a very, very, very fast growing company with respect to income, with respect to revenue, with respect to everything. And they are now at a $138 billion market cap. And I'm only looking at 5 years into the future. Basically, if you keep doing an SIP into this, it'll do really well, right? Even if you look at the forward PE and trailing PE, we're in range, so it's not bad. But this is something that I would look at. And also one other important thing, institutional holdings here, right? Vanguard has a good institutional holding, and Vanguard is a very, very big group. BlackRock is a big group. JP Morgan is a big group. So all these companies are already there here. So I think these 4 or 6 companies that I mentioned right now is something that you can do an SIP basket in and start saving this as well for you guys. Okay. Okay guys. So that was it. A quick episode on the entire US stocks that you can start creating an SIP basket right now, because why? It is a golden opportunity zone for us to now invest in global markets or in US markets or in any markets which are not Indian. Also, India also you need to have some kind of allocation, but globally also you can have some allocation. Apart from that, don't forget the giveaway. There is a link in the description. So if you use that link, sign up with that link, you fund your US account, you get 750 rupees of Apple shares for free from INDmoney itself. So I hope you guys do that, take some advantage as well. Okay, so this is me, Shashank Udupa, signing off. I hope you guys had a great day. Start investing. These are good times to invest. Don't get too worried and don't get too scared. Look at the future, invest in fundamentally strong companies, and we are good to go. Okay, this is me, Shashank Udupa, signing off. Take care. See you guys. Bye.